Alright guys, now in this week's Week Ahead, our attention once again turns to the British pound with that very important self-imposed UK deadline of 15th October approaching very fast. Now, we've had another week of some progress made, Brexit talks that's finally come to an end. And we have finally now arrived at the first self-imposed deadline date of 15 October. Now, for those of you not aware, this is the date that PM Johnson has threatened to walk away from Brexit talks if a deal is not reached. Now, with time running out, the big question is, why hasn't the pound tanked in line with this looming deadline? Now, firstly, because we've seen these deadlines way too many times before, and every time the two sides agree that enough progress has been made to continue their talks. So markets are expecting talks to resume past Thursday's deadline, even if a deal isn't reached by then. Now, secondly, markets are still leaning towards a deal as opposed to a no deal outcome right now. Now, might that be a tad too optimistic? Sure, but this isn't the market's first Brexit negotiation rodeo. We've been through 2019 with a very similar thing with the withdrawal agreement negotiations. And apart from that, given the stress that the COVID-19 pandemic has brought on the world's economy, the two sides have never needed a smooth exit more than it does right now. So yes, we've seen the regular negative rhetoric this week with the EU saying that they don't believe the UK will walk away, and the UK saying that they are really going to walk away from talks, but the markets have rightly discounted this as it fits the usual political posturing game of chicken that we've seen from these two sides way too many times. So what comes next? Well, do check out this great illustration from ING's team below. The next key date to watch out for is, of course, that 15th to 16th October EU Council meeting. Now, what does this mean for us from a Brexit front in the week ahead? Well, after the recent call between the big guns, which was PM Johnson and Ursula von der Leyen last Saturday, the two sides agreed to two more formal rounds of negotiations. Now, the first one was this week, and the second one will take place this coming week as David Frost travels to Brussels to meet his counterpart Michel Barnier for another round of talks. Now, these talks will be crucially important from a timing point of view. Remember, PM Johnson's 15 October date wasn't just an arbitrary one, it coincides with the start of next week's EU Council meetings. However, do keep in mind that right now, very few analysts expect a deal to be reached by the 15th and expect talks to be extended towards the end of October and maybe even early November. Now, having said that, running up to the council meeting, there will be some increased volatility once again in the air by looking at the options market and what they're pricing in. So we do need to be very vigilant for any negative or positive comments coming out of formal talks before we hit Thursday's meeting. Now, apart from the general positive and negative comments hitting the wires, there are essentially two very big sentiment tradable shifts that we can look out for in the week ahead. The first one is an announcement from the UK side that there has been sufficient progress made in the talks to allow the negotiations to continue throughout the month of October. Now, even though markets are expecting this to happen, it will be a sign of good faith from the UK side, and as long as the two sides are still talking to each other, the possibility of a deal should outweigh the probability of a no deal outcome. So, thus, positive for the pound. On the other end of the coin is if the UK actually sticks to their guns and announces that they are walking away from talks due to a lack of progress towards a deal. Again, this is not the market's base case scenario, but if that does happen, that will create a very quick repricing of the optimism of a deal and can create some sizable downside in sterling. Now, if that does happen, don't just expect things to be over. These are negotiations of very serious trade deals between two very important players on the world stage. And if the US stimulus developments and the Brexit saga of 2019 with the withdrawal agreement is any example, then it's only over when it's really over. So that means walking away from talks from the UK side will of course be a negative one for the pound, but be ready for subsequent announcements that talks are back on, for example. That'll be a very big risk to that scenario. So looking at potential sentiment shifts then and a trade plan, scenario one is talks continue after October. Now, any signs that progress are made in talks this week will be positive for the pound, as we've seen with recent market reactions as well. However, the biggest boost will come from an announcement from the UK side that they feel sufficient progress has been made in the coming weeks to extend talks to throughout the month of October. Now, in this scenario, we would expect to see the pound appreciate across the board, especially against the euro as well as the US dollar. Secondly, scenario 2, the UK actually walks away from talks. Now, again, this isn't the baseline expectation for the week ahead, but if we do see the UK actually sticking to their guns and walking away from trade talks due to a lack of progress, that will be a great opportunity to short the pound. Now, right now, there is barely any real risk premium built into the pound as the markets are leaning towards a deal outcome. So any breakdown of talks will drastically increase the probability of a no deal outcome, and we can see a very quick repricing and risk premium built back into sterling. Now, we would expect this scenario to see pound weakness across the board, and the best currency to pair against the pound weakness would be determined by the overall risk sentiment and sentiment at that time. So that can be either pairing it against the Aussie, the Kiwi, and the Euro, or if we do have a strong risk off tone at that stage, pairing it against the US dollar as well as the Japanese yen, again depending on the risk tone at the time. Now guys, given the possibility of further choppy price action for the pound, can be very, very risky to trade it. So it's never nice to see the markets move without us, but our idea in trading is always to preserve our capital and to grow it, not in one massive trade, but obviously to stick it out of the long run, basically building and preserving our capital as we go. So if trading something like Brexit sentiment shift just isn't your thing, don't be forced to trade this week. Watch out for the markets to show its hand before you commit to the market. And also, because we can see these positive and negative comments hitting the wires, maybe sometimes even just a short few minutes or hours apart from each other, it might be best for swing traders just to keep this one on ice until significant moves in either direction is clear, whether it's a no deal or a deal scenario. So remember, staying nimble and tuned in is the best advice for volatile themes like Brexit right now, especially this close to the deadlines.